So first of all, I'm just going to mention about TradingView. I'm not sure if you've noticed, but it's changed a bit. So I use TradingView for most of my charting. It's really good charting. I mean, I prefer it to Interactive Brokers by far, even though Interactive Brokers is obviously my broker. But it looks like they've put some limitation on TradingView so that basically they're forcing you to pay unless you're happy with just having 30 tickers. And I've accidentally deleted one or two, including the Nasdaq, QQQ, and silver, which is really frustrating because I can't add them back. I've got so many of these different symbols. So when I'm looking for the Nasdaq, I have to type it in, which may just add 5 seconds to the video. So there you go. I'm going to look to maybe subscribe to TradingView, or there's another one called Go Charting, which is still free. I don't know. We'll see. But I didn't realize that. Anyway, let's look at the markets. Yesterday was very, very interesting. There was some wild moves. So it's a bit of a special week. You've got options X, I believe, some quad witching style moves. So some of it it's not supposed to make too much sense. Yesterday did not make sense. Yesterday we had, sometimes I mention specifically when talking about gold and miners, I say you got to watch the markets, the dollar, obviously interest rates. And most of the times it's reacting to the dollar, but this time it reacted to the markets, if anything, and it didn't care about the dollar move. So we'll cover that later. But well, we had data out, obviously, and we have data every day. I mean, today I believe we have, what do we have today? We have the ECB's speech, we have Empire State Manufacturing. That's pretty big. Normally we should have some other stuff. What is it? Industrial production, Michigan consumer sentiment, that moves things. So anyway, 3 or 4 data releases today as usual. So S&P, what did it do? It closed near high of day. It was bullish. Now it looks good. Now it does actually look okay. It looks like it's ready to test 380. Sorry, Nasdaq here. I'm looking at the Nasdaq. It's just because of this. So looking at the Nasdaq, it looks like it's going to test 380, at least the QQQ. And if it closes above 380, then on we go to 384 and then the high. I cannot believe that it is possible that it works out and that we start testing the highs, but you've got to factor that in. If, of course, we start closing below 370, 371 even, we could start to easily test the lower range of this ascending. So it's very tight. You can see where we're going here. It's this sort of, maybe I should even add that, this pennant here. If I remove this, even though it is a trend line, at this point, it probably doesn't count too much because we're in a very, very tight pennant here. So there will be a breakout or breakdown in the Nasdaq, the S&P. Normally I start with the S&P, but because of my deleted symbol, same sort of thing, looking to test this 45350, a close above that. You can see this little line here that I haven't drawn, but you know what I mean. Once you close above that, then up you go, maybe gap fill, but really you're testing the highs. However, if you start closing below, especially this candle here, 443, let's say, then down you go to the absolute bottom of the range, and you don't test the ascending until you've lost this probably. So, but again, something's going to give way soon. It's obvious. Dow Jones, obviously also bullish, testing this trend line. More on the bullish side. Let's see. It's all about today. Today's also the weekly close. So will it close above this 35,000? I guess that's the number it's looking for. And then off it goes, go test 35,500 range. Otherwise, do we start going lower? And then next week, maybe test the ascending. And if we close below, then this works out. So it's, at the moment, it looks slightly bullish because of yesterday's moves. It was, a strong day for the markets, but it doesn't take much to immediately look a little bearish because we're in a very, very tight pennant, and that's the way it works out. The Russell, yeah, I was pretty adamant that it might crush down, but look, we had good news. So gaps open higher. I mean, opens pretty much at the open of yesterday. So that was pretty impressive. And there you go, decent close, but very, very, very far from the others. So that's definitely underperforming still. Let's see how let's see what happens to the other markets really, but the Russell's pretty much going to be the first one to start flushing again. But at the moment it's back in its ascending range. So, I guess the next resistance is 190. So let's look at the banks. They did quite well. XLF, look at that. We zoom out. It's testing this descending. So the XLF is pretty strong, especially compared to the others. But again, it would need some follow through in the general markets before it can close above this descending, and then ultimately test this range here, 35.70, and then maybe go up to 37. So for me, first resistance is the descending. Next one is this horizontal high over here, and then we test the highs. Otherwise, if it starts closing below, and this will take a couple of days at least, below 34, then we test the absolute 33.50, and then down, down, down. The KBE, just about making it back to the ascending. It doesn't really count too much. Again, it needs the markets. This thing is the first, like the Russell, but even worse than the Russell. It's the first one to roll over, close below this 37.50, and then down, down, down. So KB and KRE, exactly the same thing. Look at the KRE is not even back in the ascending. So they're still weak, but look, they go up on up days. So 2%, you know, it's normal. The things that get trashed the most, bounce the most. So, you know, the markets look okay, but we're in a very tight range. This is like a bit of a gambler's range. You don't know which way it's going to go. The bias is to the downside because we're so high up. The fundamentals of the economy is so bad. So, yeah, let's look at interest rates. They also were slightly interesting. Start with the 1 year, which is always a bit difficult to read. I'm not going to think much about this. It's very early on in the day, but basically nothing yesterday, just sideways action. Today, this is irrelevant. It's too early in the day, light volume. 2 year, however, look at that. You know, after the candle from Wednesday, which was a pretty negative candle, we tagged the resistance perfectly, by the way, and closed pretty, you know, low of day, below all the other candles. It looks like we were going to maybe have some follow through, but because of the data, up we go, and now it looks okay again, just like the markets. But the thing is, the problem is yields look okay, going back long term, medium term, even short term. So now it looks like we're going to break out. And we definitely have the global macro picture for that. So yields look like they're going to go higher, and that should pressure the markets. 5 years, same thing. Look at that. Bad candle on Wednesday, immediate reversal on Thursday. 10 years, same thing. 30 years, same thing. 30 looks even better. So if you start closing, look at that 30 year, 4.4, close above 4.4. Bam, next week you're testing the highs again. So it's funny the difference a day can make. And that's why I don't read too much into data or predicting it. Just see how the market reacts and then read the charts. And today, markets, including yields, by the way, look like they want to go higher. And one of them is right. And I think yields are correct. And I think if yields start to make new highs, the market has to go down. So for me, I still stick to markets down, yields higher. But again, you have to react to the news. And today we have multiple news releases, not the biggest ones, but still, you know, they will move the markets enough to change the chart. Yeah, okay. Oh, look at that. That's interesting. I didn't notice that. British yields going lower. They're breaking down a bit. Look at this trend line break. Maybe give it an extra day. It may already be done. No. Today will be interesting for the British yields, actually. I didn't notice that. But if we look at the others, the EU yields, I think they're going to go high. But I mean, look what Lagarde said yesterday. And she's going to make a big speech today. So that will move yields, EU yields, and therefore the euro, and therefore the dollar, and therefore US yields, and therefore the markets, and therefore commodities. So everything's related. But I think she said she raised interest rates, didn't, you know, the market didn't expect it, only 25 basis points. But at the same time, she said it's probably the end. So I think I didn't really read too much into the news. I was really watching the market more, but maybe that's what happened. Maybe it was the EU, the euro going down because we're going to look at DXY now, but euro going down because despite them surprising with a 25 basis point rate hike, the fact that she mentioned that it might be the end, that smashed the euro and therefore moved the dollar up, and therefore yields in general moved up. So maybe it's Lagarde that moved everything yesterday. I didn't read too much into it. Okay, let's look at the XY because that sort of segues into what I was talking about. Look at that big move. Now, on Wednesday, we had a bounce from the low here because of the Japanese yen. Remember, they're all in the same boat. Bank of Japan, ECB. It's not just the US and the Fed. So it was bouncing from this drop because of the Japanese yen, and then because of Lagarde, up we go. So the last sort of from Wednesday onwards, it's really been foreign central banks that are moving the US markets and the US currency and all that. So a little bit of a retracement so far in the morning, but just retracing back to prior resistance because it's smashed through, right? Resistance would have been 105. We smashed through, close very high of day. So I think the XY wants to go to 106, 105 point, you know, 105.8, 106 sort of range. Zoom out, see what we're talking about. So DXY still looks good. I mean, look at that. It's just higher highs, higher lows, makes a new high, test support, goes up, test support, previous resistance being support. So DXY, you can't say looks bearish yet. It's this very steep, tight ascending that it loses and then down it goes a level. But for now, it hasn't lost it. So still technically bullish, DXY. But decision time coming soon, and we have resistance pretty close above. Let's see what the data does. And obviously the currencies are just reacting accordingly. So euro down yesterday off that news. Let's see what Lagarde does. That will definitely move. Japanese, look at that, dollar's strong against Japanese yen, but I still think something happens up here. Bank of Japan will react. The pound, not too important, but bouncing off a level. Canadian, even less relevant. At resistance, so maybe Canadian dollar goes down, US dollar up. So for me, US dollar can go higher. All right, let's look at commodities because that was pretty strange stuff. Yeah, copper, again, I'm just going to say sideways, bias to the upside, medium and long term because of what I think is going to happen to the economy and the fundamentals of inflation and monetary metals and commodities in general. But, upward move. Let's see what happens to the dollar. You know the story. Let's see what happens to the dollar and the markets. So yesterday it was up because of the markets more so than the dollar. But it was a strange day. Natural gas, that is just teasing with us. That's why I always mention 2.9, close above it, because it ventures above, but it doesn't close above. And yesterday it was pretty strong rejection. Look at that. It goes all the way up, closed at low of day. So today, let's see, it needs to close above 2.9. Then it rushes all the way up here. And then everyone, the whole world's going to watch this 305 or higher close. And then we squeeze. But for now, it's toying with us. I'm used to it toying with us. People playing with stops at very strict levels are probably getting wiped out every single time. So that's why it's good to have a long-term core position and maybe trade a little bit around it. But you've got to have your core thesis. I'm not doing that. I'm just holding 2 out of 5 tranches that I bought down here. So I'm good right now, but I'm looking for the big move high. If it flushes, which is far from doing right now, but I'm happy with that too. Natural gas still bullish, but that's definitely a bit of a rejection there. Waiting for that 2.9 close. Oil just keeps marching high. Look at that yesterday. Up with the markets. Dollar doesn't matter. But again, the commodities didn't really care too much about the dollar yesterday. So up it goes, and for me, we're getting very close to resistance, 92 to 93.5, let's say. You can see why I say that. Just this descending, it might be off by a few millimeters, but pretty much you put a massive little symbol here, and that's your sell zone. So in fact, if I was still long oil, I'm long one mini oil stock, Prosper Energy, which doesn't react too closely to the oil price, but still, if oil goes up by like 10%, my stock moves up too. But if you are long oil outrights, then I would be trimming a little bit now, a little bit here, a little bit there. That's just the way I would do it. I would do it just before my trend line, just to be sure. You don't want to wait for that perfect number and then it starts to retrace, and then oh no, and then you start to panic, not panic sell, but chase the sell. Yeah, so for me, it's very, very close to resistance. 92 to 94 should be resistance. Yeah, that's my take. But beautiful, beautiful move all the way from the mid 60s, pretty much. So beautiful. The only thing more beautiful is uranium. It hurts my eyes to see. I'm not in it, but wonderful. Look at this candle from Wednesday, close at high of day. I said there's no resistance till basically 27.50 or 28.50, this range here. You can see why, right? I don't make these numbers up. And what happened yesterday, just a gap move up. It didn't close at high of day, but you can forgive that. 3% move, incredible. The miners, incredible. I wish this was happening in gold and silver, but they deserve it. It's beautiful to watch. I am actually happy. They say some people they hate more the moves they miss than the losses they endure. I'm okay missing moves. I mean, I've been doing this for over a decade, like almost 15 years now. I'm used to missing moves. There are moves every day. This one is one I really believed in. This is like a fundamental long-term commodity cycle move that I missed. So I should be ashamed of myself, but it doesn't let me, feel sorry for myself. I don't feel any pain. Like I'm actually happy for the people that are in it because I know they've suffered a lot over the years. I remember watching this, didn't even trade this breakout, but this is wonderful. And I still think it can go higher. I don't think there's really much resistance till 27, even 80. I would probably trim 27.79. I'd probably trim a little bit of my best uranium, like Cameco would have been the one that I wanted. I wanted it even when we were trading this range, and I felt scared of chasing it. But anyway, I don't want to torture myself. Beautiful move. Any drops should really be bought. Or, I mean, I wouldn't buy an immediate drop. Even 25, I wouldn't buy. I would buy if we start testing 24 or definitely lower. This ascending trend line would be great to buy. I think we'd probably have a market smash. You'd probably buy that. And then if it goes lower, who knows? It could go all the way down to 20, retest the breakout descending trend line. That's a huge buy down here, but I'm only dreaming. That I will buy. I absolutely guarantee you. Okay, gold and silver. Silver, by the way, I need to bring up the ticker. So gold did its thing, you know. This is very nice. It's nice to see gold go test 1900, even just clip it a little bit. Did it actually go below 1900? Or maybe it didn't. It would have been better if it just went to 1898, but whatever, it's the same thing. Touches 1900 and ciao, closes at high of day. Today so far, we have a bit of follow through. It's early in the day, but still $7 is nice. For me, the chart, you know, it looked bad the last couple of days, but it can look immediately good. It's funny what a difference 1 or 2 or 3 days can make. But if you start to close above 1930, that's beautiful. Then we've cleared all of the last couple of days, and now we're looking for, and I've said this also yesterday or the day before, you'll be looking to test this descending trend line, 1940. It depends when it happens, but let's say Monday or Tuesday, you know, it could be 1940, which used to be the line, the horizontal line in the sand, which I should delete, but it actually may still be relevant, but just by coincidence. So, you know, imagine you close above 1930, then you're testing the descending, then you're testing this 1950 range that we never cleared the last couple of weeks, and then up you go 1980, and then to be honest, 2000 is irrelevant. There's no resistance there. It's 2020, 2050, etc. Then we're joining the party with the uranium people. But I'm looking for the 1930 range. If we go low for whatever reason, I think a close below 1900 is what gold needs to go down to the 1885, and then we'll talk about 1860. But today should be a bit of a move. I can see $10 or $20 move in gold. Let's see. There's quite a lot of news every day, so let's just see how it goes. But gold looks good. Silver, I'm gonna have to look it up. It's a bit of a waste of 5 seconds, but I didn't even know that. Look at that. Absolutely on my little target. Beautiful. Absolutely strict adherence to the technicals. I'm going to delete this, and it's done its job. 1, 2, 3. So right here, this is supposed to be strong buying. And I said, actually, did I say that? Well, I said this would be a very, very strong buy zone for sure. And I said maybe silver turns gold around, but by pure coincidence, silver down here, or by fate, equated to gold at 1900, which is also a level. So off they touch their levels and up they go. And okay, silver was quite weak yesterday. I did notice that, despite losing the symbol here. You know, closes below all these candles, so definitely didn't look as good as gold. But look what ground it's making up today. Okay, it's not up too much, you know, 0.5% is not much, but that's a nice candle. And if we can close above 23, let's say 20 at least today, then up we go to, yeah, I'd say this range 24. And if we can close above 24, and gold will probably be, I don't know, 1940 or something, then up we go here. And then we've got this 1950/1980 range. I'm not sure where gold will be. It obviously depends. But silver has absolutely done what I hoped it would do, which is to refresh itself after a strong buy here. And it makes sense, right? Look, this is ascending support. They work. Also, it coincides with this zone. Also, it's a big round number. And also, gold is in 1900. So it totally makes sense. This is not just totally random. So gold, silver kind of did its thing. Now, the miners, I would say, are outperforming because, look, they didn't go down really the last. I mean, yesterday, where were they? Did they test their 1900 range? No. So the miners were outperforming. And remember, silver was down. It was red yesterday. So look at the miners up 1.5%, 2%. This is what was a bit strange about yesterday's move. You know, the dollar was up. Why is gold? Well, gold was sort of flattish, let's say, but why were the miners up? With the dollar up, you should have a gold, silver down a lot, miners down a lot. But no, it was following more the markets, let's say. But also, just the miners are undervalued. So sometimes you have a bit of value buying. And it's a bit of a special week, like I said. So, but it was good to see, you know, up 1.5%. let's say by average. Yeah, GDX resistance for me is 30. I'm surprised we didn't test, oh, sorry, 29.50 to 30. I'm surprised we didn't test a little higher, but maybe the DXY ruined the party. But there you go. If we have follow through today, and so far looks like we will, right? Then we should test this little target here. So I'm going to leave that exactly where it is. Let's see if we can reach it and hopefully close as high as possible. And then next week could look very, very nice. But let's see what happens to the markets and the dollar. I think something's going to happen. Something big's going to happen very, very soon. So let's not get too optimistic. GDXJ, same thing. Look at that. Tags its resistance. Closes above all the last couple of candles. It's nice to see, given what happened to gold and silver and the dollar. So let's see if we have a follow through. Hopefully a close above 35.50 would be really nice. So yeah, let's see what happens. Bitcoin, yeah, bouncing with everything else, but you know, I think the damage is done. It really needs to close above let's say 28,000 at least to stand a chance to rally and retest its highs. Otherwise, back down we go, and 25,000 close below that. So 28 to 25,000 is the range. There you go. I hope that was useful. Good luck today. I can't wait to make my weekly portfolio recap of the miners. Haven't done that in a while, and some of the miners are worth talking about. By the way, Aris Mining, which I've lost, that ticker's changed. Another one I'm gonna have to look up live. Just show you that. Yes, I didn't even notice it. Look what happened yesterday at Aris Mining. Wild stuff. And I didn't even sell. I didn't even know about it because the ticker changed and I didn't have it up. I didn't log into my broker. Sometimes I just watch TradingView rather than my broker just to, because I'm a bit lazy. And otherwise I would have sold this range. Obviously, look at the descending, look at the horizontal. I would have clipped it probably 277. I would have got that because 279 never, 280 didn't get to, so I wouldn't have put 279. But that was that's a wild candle. I didn't even, yeah, it's okay. Anyway, I'll go through the miners another time, obviously, but it's just yeah, I mean, look at this Newmont, Wheaton, look at this breakout, mini breakout on Barrick Gold, Nico Eagle testing it. So some of them are coming very, very close to decent moves. Even Wheaton, didn't it do it? No. Mag Silver, look at that massive move. Some of them are really worth going to. Discovery Silver, look at this wild stuff. It was up 15% at one point. So some of them are, there's some wild moves going on. So I really look forward to the video on the weekend. So anyway,